So greetings, everybody. So we are very, very fortunate this evening to have two speakers talking about crowdfunding. Now, those of you who are in the incubator, I've mentioned crowdfunding to you a few times over the last few months. And right now, fortunately, I guess a few weeks ago, I was up at Loyola in New Orleans, and Rick Mekdessie, one of our speakers tonight, happened to be there. And they did a quick introduction around the room. And when I heard his area of expertise, like my ears perked up, and I stalked them and tracked them down at the end of the session and introduced myself. And fortunately, here he is this evening. So Rick, his colleague Heidi Fitzgerald,
Hello.
Hey Heidi, are with CROWD9 agency, and that's crowd9agency.com. You can see on the screen their website URL. And CROWD9 agency provides guidance and resources to startups seeking to raise capital through crowdfunding. And this evening, I asked Rick, and he and Heidi agreed to introduce us to crowdfunding as a way to raise money for your business needs. Okay, so Rick, I'm going to turn it over to you. I'm not sure how you like to. You want somebody to monitor the chat box, and or you just pause intermittently and let people ask questions and engage? How do you want to do it?
Sure, it's whatever whatever you're comfortable with. We can make this interactive, or we can, go through and save questions towards the end. I don't mind, and I'm speaking for. I think Heidi doesn't mind if if there's any kind of questions or issues or concerns that they have per screen. It can be appropriate. I just don't know how we, if you would like them to speak up, or this is a meeting, not a webinar, correct?
Well, it's a meeting, yeah, more of a meeting, yeah.
Okay.
So I do see two people in the room that are not shy at all.
Okay.
So we could just follow their lead.
Okay.
Okay, so
We're flexible.
thanks.
Yep.
We're just thankful for the opportunity to chat about crowdfunding. We've kind of taken this on as our trying to go ahead and kind of spread the word and create awareness about what's available out there and what the industry is doing. And so that's why we've put this together from an introduction standpoint. We're not going to really take deep dives into any one area, but just enough so that you kind of have an understanding, and we can always circle back and discuss more details if you so choose, if there's areas that we didn't cover well enough or you have questions or concerns about. So with that, we'll get started. And Heidi, I'll kind of take the lead, and Heidi will correct me if I ever say anything wrong or incorrectly, and also add to conversation if we need to. But let me go ahead and start. And so we're just going to, not knowing where we are as far as the audience, we're going to give a brief history or a little background about crowdfunding itself, and then we'll go into some of the different types of platforms and opportunities there are within crowdfunding itself. So crowdfunding, is the act of raising the capital online, and that's from multiple, individuals or investors, backers, and especially with recently how the pandemic, there's been a big boom in as far as entrepreneurship in the last 2 years. And some of the statistics with it is there are over 5 million applications for business tax ID numbers in 2021. And so that's surpassed the 4.4 million that they had in 2020. So there's a trend of businesses continuing to get incorporated. People are, it's this great resignation or things that they're talking about as far as people wanting to take the opportunity to try self-employment. And so crowdsourcing is when you take information when the crowd itself provides the content. You see that in a lot of these platforms where like artwork or graphics, and they have a platform and the creators upload their artwork and they do a revenue share with the platform, and that's crowdsourcing. And then funding, and that's how they came up with this term of crowdfunding, relying on the power of the crowd. And so as far as the industry, North America is a leading region in the industry from a global standpoint. But then there's like only 1/3 of Americans are unfamiliar with crowdfunding and what it means. So there's a large percentage of people that are still, not knowing much about it, or they think of it only in a certain term. But it's definitely catching on, and there are different versions of it that are coming around now that are really, starting to get traction. And the reason why, it is this way is because, a lot of these banks are reluctant to lend to smaller or risky businesses. Venture capitalists, they want the high growth potential of companies. So there's this gap in funding for companies that are either startups or different types of industries. So that's why there's this gravitation towards the crowdfunding, and it's starting to really catch on in the US especially. So a little bit of history about actual crowdfunding. So it actually, one of the, I guess, oldest or most recent or oldest versions of crowdfunding itself was in 1885, when the Statue of Liberty was a gift from the government of France. And it was designed in France by a French sculptor. And then when it came over to here, it needed a pedestal, and there wasn't enough funding from other agencies to fund a pedestal for it. It was like 250,000 was required, and that's like 6 million in today's money. So after exhausting all other options, the publisher of the New York World newspaper, Joseph Pulitzer, yes. I'm sorry. He decided to run this campaign, a fundraising campaign, through his newspaper. And the campaign, raised from more than 160,000 donors. Everything from business people to street cleaners to politicians, and more than 1/3 of the donations amounted to less than $1. So they were able to raise this money, and it was really one of the first crowdfunding efforts that we see now in the modern day crowdfunding version efforts. It has a lot of the same characteristics: the speed of of which money can be raised, the number of small donations, and the fact that the whole process was managed through like one agent, which was the newspaper at the time. But it can be now. It's an online version of that. So that's the oldest recorded. That's one that everyone uses as far as going back in history as far as crowdfunding. Now, a more modern day version of crowdfunding was recorded in 1997, when a British rock band wanted to do a US tour, but they realized that they would lose about $60,000, back then, if they toured the US. So what happens is their fan base, and they told their fan base this, and their fan base took it upon themselves to raise the $60,000 online, from all of the people and the fans of the band, and they gave that money to the band, and the band toured the US. And this was back in '97. So that was one of the versions of it from an online standpoint. And then in 2008 was the first true platform, a digital crowdfunding platform that was available in the US. And it was Indiegogo, which is, that's where the name came from. It was an independent filmmaker that wanted to fund an idea for a film that he had, but he couldn't get the funding from any producers or anything like that. So what he did is he raised it through a lot of friends and family, and then out there to the public for people that wanted to see his film. And he raised it on the merits of the film itself. So that's how Indiegogo, that's where it gets its name, from independent filmmakers. And what it did is it actually kind of turned fundraising on its head, or upside down, to where instead of raising money from a large amount of money from a few people, it actually raised a small amount from a large number of funders. So that's how crowdfunding actually, and that's where it actually started. Since then, Indiegogo has evolved into a true crowdfunding platform. It's one of the largest, if definitely on the top 2 or 3 out there. So that's another platform that has taken off recently. So now what we're going to do is talk about some of the benefits of crowdfunding. It is definitely an alternative as far as raising money compared to loans or traditional funding, but it's not as difficult. And the idea, a lot of the ideas that may not be funded are by the traditional methods can be done through the platform, crowdfunding platform. It allows startups to raise funds without giving up control to investors, so that you're still kind of dictating the terms of the raise, and not having to negotiate valuation with investors, so that that you rely on the wisdom of the crowd to determine if your valuation is fair or not. If the crowd feels it's not fair, then they're not going to invest in your company. So it also gives an opportunity to kind of gauge the public interest of your product, idea, company, so that you'll know whether or not you have something, and it's somewhat of kind of like product validation or a product market fit for your company or your product. And campaigns can be funded quickly with little or no upfront fees. You can gain a lot of interest or attention through social media when you're on, when your campaign becomes very popular. And then investors can track your progress to see if you're getting traction, if you're making progress towards your goal, and then they may then decide to engage at that time to support your campaign. So a lot of these successful campaigns, crowdfunding in general, they raise an average of about $33,000, a little over $33,000 per campaign. But crowdfunding itself has added about 65 billion in revenue in the global economy. So that's a significant amount of revenue, and it's only going to grow more. It gives the entrepreneurs a way to validate their ideas before they go to production, and by letting others kind of buy in or get pre-orders, donations, and things like that, so that they feel more comfortable in moving towards production, towards investing in it. But then there are risks, associated with crowdfunding as well, of course. Campaigns that have copyrighted material that are not copyrighted or patent, run the risk of, because your information, your idea, they're out there, and another party can take it or expand on it, or so. So those are some of the issues that you might want to be think about also. And then if you say have a crowdfunding and you're going to give some kind of reward or return for your to your investors or to your backers, if you didn't value it correctly, a lot of the money that you raise could be going back to those supporters and not giving you the traction or the funding that you truly thought you'd have. So we'll go over some of that, where you definitely want to make sure that you're able to know all the costs involved and know what your production costs or any other fees are going to be involved in it. So, especially like payment processing and other fees from the platforms themselves. And sometimes if your goal is not fully funded, you may lose all of the pledges or support that you've had from your supporters. So you got to know those kind of things also. And we'll kind of go over that as well, so that whether or not you can risk not making your goal. And also, not every campaign is accepted by major platforms. They vet them. They want to make sure that they are valid and good products that will attract the attention of their investors, their supporters on their platform. And a problem that could happen is, if a startup doesn't reach its goal or the campaign fails, then that's out there in the public, and the startup's reputation could be damaged. So you want to make sure that you know that. And not all crowdfunding campaigns reach their targets, but 78%, however, 78% of the successfully funded campaigns exceed their funding goals. So if they reach the goal, then they're usually about 3/4 of them are more than their goals. They raise past their goals. So any questions so far, or are we good? Am I hopefully everyone's clear on what we're doing so far. So now what we're doing is we'll go into the different types of campaigns as well, or crowdfunding types, classifications. So we have donations, rewards, equity, and debt. We're going to focus mainly on the top three, the first three: donations, rewards, and equity. But there's also other kinds of, from real estate crowdfunding to civic crowdfunding. Civic crowdfunding is when you have matching funds for a grant or so. All these sites and all the different types of crowdfunding, they all have their different features, unique features, and platform fees and structures and user base. But the core concept is all the same. On the platform, you submit your raising goals, the deadline, then you launch your campaign from support online, and it's usually through social media. So that's the common denominator through all of these crowdfunding platforms. And it's important to know crowdfunding is strictly online also. But, as far as a lot of these from equity standpoint, and some of these have other requirements once you're on that on that platform. So let's talk about the first top three one by one. So donation crowdfunding. Basically, it's when the creator accepts funds without offering anything in return. It's usually like nonprofits, charities, or personal goals or objectives. Funds can be accepted with no additional obligations to the donors. They can be accepted without the project being fully funded, and they usually have less fees, so that more money is raised directly for the project and the project creator. Those are some of the benefits. Some of the risks, though, are that donors don't have a lot of trust in these types of campaigns or crowdfunding platforms, because there's less vetting going on, or requirements to build a campaign on some of these sites. Fraud happens often on these kind of platforms like GoFundMe, because the barrier to put something on these platforms is very low. GoFundMe and Fundle are two of the bigger crowdfunding or donation based crowdfunding platforms. And usually 28% of donors to nonprofit crowdfunding platforms donate to that campaign again. So they want to see you meet your goal. If you're getting close, they want to, it's usually more of a passionate project for them. So that a lot of times you'll see some of these donors donate multiple times to a campaign. Reward crowdfunding is when you offer rewards or incentives, but it's not equity in return for pledges from backers. So a lot of times this will mean that if it's not fully funded within the campaign deadline, though, you may not receive any of the funding from the backers, and all of the pledges are returned back to the backers. And you don't have to, if that happens, if your campaign is unsuccessful in this type of setting, there are no fees involved. And but you can also adjust some of these campaigns or some of these rewards as well. So you can have different tiers in reward crowdfunding. One of a good example would be a gaming company wanted to raise funds to create a new game. So they had the basic tier that they allowed for funding, but then they had a different tier, a higher tier. So if you donated to this game campaign, then you would get a copy of the game. If you went up a tier, then you might be your name might be in the game. If you went up a higher, then you may be a character in the game. So you have different levels of rewards for different tiers of rewards for these campaigns. And a lot of times, a lot of these backers, they get excited about the incentives, the rewards. And you can sometimes with reward crowdfunding, you can usually move a lot quicker. They usually move at a quicker pace than other kind of campaigns. In most cases, they're free. There are no up costs to launching a campaign, and you can gain momentum from the campaign itself. If you can raise at least 25% of your funding goal quickly, then it's more likely to reach your full goal, because everyone wants to invest or be part of a successful campaign. Some of these campaigns some of these platforms have a lot of investors on it, And so if you're able to get onto one of these platforms, popular platforms that have a large number of investors, then you get a lot of attention, and it's usually free attention. Even within 90 days, you could get fully funded. And the other thing about this type of crowdfunding is you keep 100% of the product of your work, and basically you're getting a lot of users and ambassadors of your company, of your product or so. Now, some of the risk involved in it is that, well, I don't want to say risk, but downsides to it is that on these types of platforms, reward-based platforms, the money that you raise is considered income, and it's taxable. A lot of these platforms will issue a 1099 to you, so you have to report it, and you have to make sure that it's paid. Taxes are paid on it at the appropriate times, and you don't have to wait until the project is fully funded to see any of the income come in usually. So a lot of times it's not this all or nothing. You can get funded, and some platforms give you the choice of whether or not you want to. Do you want all of it, or do you will you take partial funding? And most of the platforms do take a fee, though, for this type of funding. The fees can range from 3% to 7% of the amount raised of a fully funded campaign. But you also have to factor in any payment processing fees that are involved with the contributions made to your project. Taxes, fees they can sometimes cut into that margin if you didn't budget for it accordingly. And if you fail to distribute what you promised on the rewards, or you take you have long delays in it, backers can lose trust in project, and it becomes well known quickly. So two of the, I guess, more popular or well-known platforms for reward-based crowdfunding is Kickstarter and Indiegogo. Those are the two main ones. So now what we call the big daddy is the equity crowdfunding. So this is the newest version of crowdfunding. It was implemented with the President Obama's Jobs Act back in 2012, and it gave exceptions to certain crowdfunding transactions, meaning that back in the Securities Act, back in 1983, you had to be like an accredited investor to invest in a company and acquire stock and broker-dealer and all that. And so what the Jobs Act has done is created an exception for that. And in 2005, the commission, the Securities Exchange Commission, adopted regulation crowdfunding to implement the requirements for the Jobs Act. It's Title III of the Jobs Act, actually. And so it made it eligible for companies to raise capital using regulation crowdfunding starting in 2016. So the Jobs Act is actually 10 years old, and 2016 is when the regulation came into effect. And so it's basically you invest in you can invest in a company and you acquire stock in it. So a big popular example that they use all the time is in 2012, Oculus was a headset for
VR.
virtual reality, augmented reality. And it raised, I think, like 2.4 million in a rewards crowdfunding campaign. But then in 2014, they sold to Facebook for $2 billion, 2 billion with a B. So in that 2-year period, and I think they had like 14 employees at the time or so, but all the people that supported and gave them that initial funding to get their product working, they didn't receive anything but the headset. So that's just an example of how, equity crowdfunding give you the opportunity to invest and get in early on some of these companies, and be rewarded when they do happen to have an exit. So one of the things that is also popular with the equity crowdfunding is the way that it's also being able to evolve. So more, even as recently as 2021, the SEC has made changes to the Reg CF, regulation crowdfunding. It changed some of the cap limits. Before it was like 1.7 million was the cap for regulation crowdfunding. In 2021, they raised it to 5 million, and regulation A plus is now 75 million, which is the tier 2 of the crowdfunding, of equity crowdfunding. So they've also made changes for some improvements to where issuers can have a period of test the waters. They can gauge the investor interest before they do a launch, a securities offering of their company. And they're able now to the accredited crowdfunders are now not subject to the same kind of limits that non-accredited investors are. So the accredited investors have a higher cap than the non-accredited investors. And issuers now have a crowdfunding vehicle, or what they call a special purpose vehicle, that basically what happens is, instead of having thousands of investors on your cap table, you have one entry on your cap table for this special purpose vehicle. So then the lead investor of the crowdfunding campaign, they're the ones that kind of speak for the crowd, and they're the only ones that vote, so that you can, from a company standpoint, you can decide whether or not to speak directly to some of the investors, or only go through this lead investor or special purpose vehicle. Also, there are like demo days are excluded from being considered as a general solicitation. So there are a lot of restrictions on equity crowdfunding as far as you can't solicit until everything's been filed correctly. So some of the benefits of the crowdfunding will be the equity, the exposure, product validation, and flexible terms. And you can raise money fairly quickly. Some of the
question.
Sure.
Are there any benefits of equity-based crowdfunding over venture capital, since they're both taking equity into a company?
Yeah. So first of all, it's you don't have to go and present to a panel of investors. You don't have to negotiate your valuation or terms. On a platform, basically, you're setting the terms of the investment. and you're setting the valuation. And everything has to happen through the platform. And so there's no negotiation happening. A lot of times, some of these venture capitalists will kind of beat you up on your valuation. And so control is back on the company standpoint. Now, some of the disadvantages of the equity crowdfunding, you don't have that professional mentorship that you might have with a equity crowdfunding. But you also have to disclose everything now to the public. So, if you fail, it's made public, so there's a little difference in it where a lot of these venture capitalists, they have a little network, and they typically like to invest in companies that are more like the ones in their portfolio, or a lot of them have a sweet spot as far as type of investments that they like to invest in. So the platform allows you to be exposed to many more investors, and for smaller amounts. But if you don't have a business plan and you don't have a solid, all the requirements of any investor, from your knowing your market size, knowing your numbers, product, customer validation, and product market fit, and all that, that's still going to have to be on the platform. You still have to do all that, but it's now you do it once, and it's available to people that are interested in it. So that's the difference. Does that make sense? Did I answer your question, I guess?
Yeah, I just know, like you previously mentioned that crowdfunding was done right before production, and it could help like legitimize businesses. And in the industry, I do know like we most of the time like refer to like VC as in like legitimizing startups. So I was just trying to see like, was there any perks of the equity-based crowdfunding over VC, and was it still the same or equivalent in legitimizing a business? Like if you were going to try to go to market or pitch to other investors, if they look to see you got equity-based crowdfunding versus VC, would they still consider the same, I guess, legitimacy of your business?
Yeah, and it actually, but so it's different. So let's say that you invest in a company that you typically use, and a lot of times investors invest in something that they might know, and you might be a user of a product. Well, once you become an owner or stockholder, investor in this product, now you become an ambassador, an advocate for that. You're going to be telling everyone you know about it, because you want it to do well, because then you will do well with it as well. So you then have this army of ambassadors or people advocating for your product from a crowdfunding standpoint. So as opposed to maybe you might, a VC might have connections or relationships that might have more of an impact, but you can also do both after. You can't do them at the same time, but you can do one or the other, and you can still do, and you can also do multiple equity crowdfunding campaigns as well. So a lot of times, and we'll go into some of that, there's a little approach, a method to a lot of this for a lot of these companies. And let me know if you want me to take a little deeper dive. We can talk a little more into it too. I want to be sensitive to your time as well. So here are some charts for you that do a comparison of the different equity crowdfunding platforms. And they talk about the fees, they compare the fees, the duration of the campaigns, and the average raise, funding, how it's distributed, and disclosures that are required for this. And so this is another platform or another table showing the types of creators are people that use the different types of platforms. So as you can see, startups go across the board. That's the thing that we take away from this table, this graphic, is that startups will be available on all of the platforms. So these are the top, what we call the top platforms, the crowdfunding or the equity funding, and then the donations and reward crowdfunding platforms. And as you can see, so those are the types of, basically GoFundMe is the largest donation, and Kickstarter, Indiegogo are rewards crowdfunding. And those others are equity crowdfunding. So I guess the meat of this, and if we wanted to really talk about what's important out of this, I guess, presentation, is the considerations that you have to do before you launch. You want to make sure that you have touched on all of these in one way or another, and feel comfortable that you have figured all these out. The important things are setting the goals. They're all important, and because we're Crowd9, we put 9 of them up there. But it really we feel that they all are equally important. But just an example of one of them as far as setting the goals. And here's an example of what we would use to make a difference in goals. So if you look at this, on this one side, the goal is 50,000. You've raised 20,000, and so you're at 40% of your goal. As opposed to if you go out and try to raise 150, and you still raise 20, but you're only 13%. So what we feel is that a lot of people want to, and you want to just make sure by setting these goals that you have the minimum, and even a little, Heidi feels you need more cushion also, but you want to make sure that you can go to production with your goal so that you can deliver on what you've promised. If it's a reward or if it's a product roadmap that you've put out there, that you can reach that goal with the amount that you've set to raise. Because everyone wants to back a successful project. They want to make sure that their money is not going to be lost. So that's why the first one is setting campaign goals. Know what you're going to the cost that you're going to have for the production of it. And also you want to make sure that you're able to deliver on, once your campaign and you've raised money, that you can produce and ship a product within 6 months. So very quickly, I'm just going to go over this, where these are some of the major milestones of a campaign. And typically it's 1 to 3 months of work, of effort to start to, or be prepared to launch a campaign. And it varies depending on the type of platform that you're on. And then most campaigns will run, depending on the type of campaign it is, will run 60 days or some 90. But then after your campaign ends, usually you receive your funding, the funding within 15 working days. Now, after you receive funding, that's when you want to be able to ship your product and show that you have delivered on what you promised. It helps from a company reputation, but also if you want to run another campaign for the next version of your product, or meet your next product milestone. So that's why it's important to know your numbers and know that you're able to deliver on what you said you would. Any questions on this? Okay, so one of the issues with crowdfunding that if you talk to a lot of, I guess, folks in the investment world that may not know a lot about crowdfunding, they have this vision of fraud and trust, and they hear those horror stories of from like GoFundMe campaigns where people charitable acted like they were charitable organizations and kept all the money for themselves and took all these funds from these donors. So what the industry and platforms have done, taken it upon themselves and started to create some programs, and hopefully it's just recently that they've implemented some of these, and they hopefully will go ahead and get some traction and really start to include all of the platforms and or be more formalized or structured. The biggest one is the Crowdfunding Trust Alliance, where they will share information about bad actors, people that have done things that were not legal or allowed on their platform. They will make it known so that other platforms will be on the lookout for some of these bad actors. They have internal reviews for the platforms themselves, so that a board will be able to say whether or not you're doing a good job of vetting these companies or looking for having controls in place and communications and things like that. And so they feel that they can also have some kind of certification where if you have this trust proven badge, that you will the users or the investors or companies on the platform will have a sense of comfort as far as knowing that this is a platform that can be trusted. So basically, again, I want to make sure that I'm leaving enough time for questions, but the last piece that I have is just to go over some high level statistics regarding crowdfunding. It's growing year after year. It's grown for 33% since last year as far as the funds raised. It's generated yearly over 17 billion in the US alone. And so there are projected by 2023, there's going to be over 12 million campaigns run. And by 2030, they project that the crowdfunding market will be about a $300 billion industry. So those are some of the things. And basically, it's all because crowdfunding is becoming more accessible and a successful way to raise money on projects. And you're able to do this without a whole lot of debt or incurring a lot of fees. And so that's why we think that it is something that is going to continue to grow, and we're going to go ahead and kind of go into the project. So that's our presentation, and I apologize if I ran a little over my 30 minutes there.
Nope, you were fine, Rick. So any questions, anybody?
So either I did a really good job of presenting or a really bad job of presenting about it. But we tried to cover everything as much as we could on all the important aspects of it.
I think you did a great job. So I'd like to ask somebody in the audience to just give a reaction. So what do you think about what you heard this evening? Do you think it's something that might work for you? Do you think it's something that you may not be quite ready for yet? Talk to us.
I had a question on, like, in regards to what is the most popular type of crowdfunding that Crowd9 usually experience?
So we're going to be focused on equity crowdfunding, to be honest.
Okay.
You know, we try to, we think that that's where the focus are. And we, from a product roadmap standpoint, we also want to have a platform of our own, and to where we can have equity, or companies offer equity on our platform. But for right now, we basically are a marketing or full service marketing, and we help them, guide them through, you know, how to set up a campaign and how to, what kind of information needs to be on it, depending on the type of campaign that they're running.
And what differentiates Crowd9 from the other platforms that are available? If you don't mind
So
asking.
yeah, that's a good question, because you know, and believe it or not, you would think that there are, and there are a lot of platforms out there, but not a whole lot for equity crowdfunding, because you have to register with SEC and FINRA, that you're monitored. And so there are less than 100 platforms that are available for equity crowdfunding. In our, how we feel we're a little different is that, first of all, we're regional, we're in this area. We can, we want to focus on Louisiana and then go expand to the Gulf, a lot of the Gulf Coast states. And there's no real, the closest crowdfunding company is in Austin, Texas. So Mississippi, Alabama, Louisiana, they're not any crowdfunding companies available. And so we want to work with, help companies in Louisiana first, through the incubator programs, through the accelerators, in different entrepreneurship departments in the universities. And then from there, then we'll spread out to other general companies. But that's basically how that's the approach, that's the go-to-market approach that we're taking.
And I know how we said that, like, typically people who invest in equity in companies, they typically have like a focus or a type of companies that they have in their portfolio. Or do you guys typically do that as well? Like have a type or particular type of company that you typically invest equity in? Or crowdfunding?
You mean that, yeah.
Like your portfolio companies?
Yeah, typically we're working or talking to multiple technology companies. Now they may be in different industries, from ed tech to I guess a nutrition company, and one company is a data company for fishing. Believe it or not, they track how many fish are caught in certain areas, in some of these areas. But so that is the common thread that I guess we see in some of these. They're mainly technology companies, or they have a large emphasis on technology, or technology is a large component of their solution. Can I ask how many are any of y'all actually operating or now as a entity or a company, and or are you like wanting to launch a company? Anybody?
Can you see that response?
Okay.
Yeah, one person said yes.
That, yeah. Nate is a company. Okay. Okay. So, and so a lot of times that's kind of what we are, we even do customer discovery. So, would this be something that if you wanted to raise money through a crowdfunding platform, some of these companies will offer the services that we do on their platform, but a lot of times they're more cookie cutter. They just fill in the blanks. They have a process. and a structure to it, and your information. The only thing that changes is the content. What we feel we do is we take more of a unique or customized approach to it, but then also we look at it from a holistic standpoint of not only do we want to help you have a successful campaign, but we can help you past that also. If you need to launch and go through another round or even go to VCs, then we can have that. A lot of what I've done recently since selling my company is to mentor and help and be involved. And that's, how I met Mark is, volunteering with the Loyola group, but I've done that in Baton Rouge and through LSU, through their I-Corps program, and through some of the programs here at New Orleans Idea Village and those as well. So that's what we're wondering is if there is that interest in crowdfunding in general, and if there's an interest in having a company like ours help provide that guidance.
I'm a, go ahead. No, you go ahead.
Is it common to use crowdfunding when using like human services?
Like from a service standpoint, like if you have, when you say human services, so you provide a service, the
Yes,
company
sir.
provide, yeah. There may be some platforms that might focus on that. A lot of them, and Heidi, jump in here if you have any input, but I think that a lot of them are more focused on rewards or products, crowdfunding or equity crowdfunding. Rewards or equity crowdfunding from a product standpoint, or maybe software as a service, so platform as a service. But when you say human, are you talking about, you're thinking like equity or donations or?
Yes, like donations.
That has to be a good cost depending on what service you're providing.
Okay, thank you.
Sure. And that's what you'll see. A lot of people are passionate about certain causes. And that's what they, if it's autism or some type of education type of industry, that you'll see people that gravitate towards that. They have their sweet spot.
One of the more popular ones is definitely funding like learning centers or learning services. That is one that you will see in crowdfunding.
Yeah, good point. Okay, I think we've
Comments, folks? Going once. All right, Rick and Heidi, thank you so much. This has been very helpful.
and thank you for the opportunity. And please, Mark, if you could please share our contact information. And if anyone has any questions afterwards, feel free to reach out. Any way we can help.
Will do. Yeah, there are a few people that we're working with that are not present, so I'm sure that there'll be some follow-up on our end.
Okay, great. Thank you.
All right, thank you. And have a good evening, everybody.
Thank you, everyone. Appreciate it.